Hello everyone and welcome back to the channel. In today's video we discuss everything to do with the coiling ranges in these markets right now. It's like they can't make a decision. Risk on or risk off? What's going on? Well, what actually is happening might surprise some people that have never viewed this channel before or never thought about the market differently. So let's unpack what's going on in stocks, cryptos and commodities right now. See you soon. It's going to be a great one. Well, welcome back everyone to our daily show here where we really cover off on all the markets across the world. This is for the market close 20th of April 2022. And as we know, it's earnings season in the US. So we'll start off there before getting into stocks, cryptos, commodities, and everything else. Yeah, Tesla came out with its result. It turned out it was a little better than expected. Let's go down here. Tesla rose 4% plus after hours. Earnings per share, $3.22 versus $2.26, with an $18.76 billion revenue versus the expectation of 17.8. This is good news for earnings season, and as we know, the earnings season results here are sitting at around a 79% beat rate moving in. Yes, Netflix missed. Yes, other stocks are missing, but in general, earnings is still high. As we see this play out into next week, if we keep above 75% plus, I would say that's a good indicator that the Q1 earnings have held up better than expected and that overall the market could be going bullish. United Airlines also another one that rose 5.6% after hours, and that's really proving one of the concepts that we've spoken about here for quite some time, at least 2 or 3 weeks, which is that travel is coming back and that jets is showing us the way that travel is improving. It's a sector that most people have gotten wrong for a long time, yet it's starting to make the recovery trail. This is most likely the real one. Think about all of the things going on in the world, and then of course think about what people are now starting to do. If your friends are traveling, sometimes that's a good sign, a pre-indicator that people are ready to move. And I can tell you quite a few of mine are certainly getting ready to go overseas, spend a lot of money on services, and do that type of thing. Let's talk about one of the most important charts that people are overlooking, I think, and that is the Treasury yield curves. Now, we've discussed US 2-year versus 10-year and all these other things to do with recessions. I would never discount this chart. What a great concept. And I'm not sure who shared it exactly, but in our public Discord community under economic news, this was shared, this economic chart. Great share, fantastic. Even to me, it adds a lot of value. This is basically saying that if over 50% of all the Treasury yield curves are inverted, it's a higher statistical chance that that's the real canary. What a great concept, adding all of them together and basically saying that each time when this happened, it was the true indicator before recessions. It's very accurate. It cleans up a lot of the wrong times, the early times, e.g. the point here before, let's say, the GFC or any of those types of things, and it really shows you the big powerful ones coming, and I think that's a great one. Right now, are we at 50%? No. So great share. Thank you very much for that, and I think it helps everyone in the community. We'll keep bringing that chart back in over the next couple of years as we break down whether we think we're in a recession time or just a pullback that will end up leading into a bullish move. Remember, when everyone thinks that we're in a recession, it's unlikely to happen. Just like when everyone thinks you're in a bubble, the bubble doesn't pop until everybody gets on board that train. Think about hyper stocks recently, how high the valuations got. Everyone believed, it sucks everybody in, and then all of a sudden it dumps off. Speaking of hyper stocks, Netflix fell 35% in trade. That is a big move. That took Facebook, it took Tesla, it took Disney, it took hyper stocks in general down. Anything that's valued at a PS ratio at the moment fundamentally got absolutely smashed. And Netflix is really the precursor to this. So all eyes will be on anything that's valued at PS ratios from now on to see whether Netflix was an outlier or not. Expect volatility at an extreme level in this sector. Other than that, most things were green, and actually the market did pretty well on the SP500. To put it in perspective of when growth isn't growth anymore, e.g. Netflix business at the moment, this is what happens. It goes from being valued at an 8 times price to prospective sales to 10 times, all the way back down to where it was in the beginning. So around this 3.5 is probably more fair for Netflix business right now. And this is a price where you would think it probably stabilizes. What an amazing turn from being the darling of Wall Street, included in the FANG, all the way back down. I'm sorry for people that hold this, but unfortunately that's what happens with growth stocks when they stop growing. it gets smashed, and that's what happens. Now, where did all the bulls go? We brought this chart up in the previous session, and we know that if the bulls are not around, based on this indicator, that it does tend to lead into actually better returns. Now, what does that mean? Of course, it goes back to Buffett's concept of buying fear or buying a lack of faith. It looks like on the 14th of April, we got this reading again, very low reading, and that is usually led into actually percentage statistical bullish moves over the next 3 months, 6 months, and 12 months. You know, it's hard to fight 93, 96, and 96 to 97% over the next period. Certainly an interesting one there. As we mentioned, we're in earnings season at the moment. It's a 79% beat rate. We'll continue to update you if you subscribe to the channel on how much the percentage beat rate is. Very important we know the overall, because that's going to be a big thing as part of whether this market can take risk on or not. Tesla so far, I'd give that a little tick. Well done. Airline companies so far, give that a little tick. Banks so far, we'd give them a tick. Let's see what American Express can get done. Snap. That's the new one that everyone's looking at. Thursday after the close. Please remember that is coming out, and it will hurt social media depending on how it goes. If it goes bad, watch out Facebook, watch out all of the rest of them. If it goes good, then of course we'll look at it. Now, I want to just really show a chart that I think really exemplifies that markets are not all equal at the moment. This is the Dow. And does the Dow look weak on your charts? We've got a trough down here. We've got a peak. We've got a higher trough. Do we get a higher peak? The Dow is actually doing incredibly well. The US 30 is doing incredibly well. And in comparison to others, it's really holding up. If you take a look at the VIX, remember the VIX is based on the SP 500, also holding better than some other markets at the moment. It's declining here, which shows us that fear is coming out of the market. And of course, if it goes under like an 18.5, what's that really telling us? That the bulls are back and potentially risk is back on across all sectors at that point as well. The VIX will be something we need to continue to watch here over the next few days. If we take a look at the US 10-year, as we mentioned, it hits that 3%. That's a resistance. And we know the US 10-year trades fairly technically because it stopped last time right on 2. Just before 2, hit it, sold off a bit. What caused or what happened after that? We got a little bit of a rally into technology. So we saw a little bit of a rally risk on. Now it's rejected at 2.98 and it's gone back down to 2.86. So keep watching this US 10-year. Depending on how this trades, if it keeps dropping, there's a good chance that we might actually see a bit of risk on coming through. And that's going to coincide with some charts we look at later in today's video. PCC, put call ratio, actually showing us that there's a decent amount of calls being opened here on the short term in the markets. More calls than puts, not necessarily great. I would rather that we had more puts being opened in the market, but it's in the middle of nowhere, so it doesn't help us too much. We will update you on if that becomes worthwhile. Dollar index, often seen as a risk on or risk off sentiment indicator. We had the breakout. At that point, really what happened? We saw the NASDAQ start to decline. And this has dropped in the last 24 hours. Now it's recovering a little bit, but if the DXY continues to fall, is that a good sign for risk on? I would say that's a little bit of a tick. Generally, yes, it's fairly strong. Let's move over to gold. Now gold took a massive dive off that fib. So if we take the fib here of the top to the bottom, we obviously expected it to get back to this 61.8 fib, $2,000 an ounce, just stopped shy of that, 9.8 or 9.7. That's really where you need to take your profit though. You need to go a little bit earlier than what you expect, and it's sold off that point. So currently it's finding a little bit of buying pressure around the previous resistances that's acting as support. It's rallied, it's hit the moving averages here on the 4 hour, and it's currently selling off. What you need for this to do is to go bang, pull back a bit, make a new peak. If it makes a new peak, cool. Next rally point, 1980. So that'll be good for day traders. If it makes a new trough, that's very bad. Be very careful in gold at that point. Gold is susceptible to the US 10-year as well. So if the US 10-year does start dropping, you might expect actually gold to do better than you think. So again, break through that 1960 could be a very good level here for gold. We'll continue to watch it. Let's move through to WTI, that is oil. It recovered somewhat as well, looking for a break above 104 per barrel. If that happens, it's kind of, come down, had a pullback. We move back into maybe some risk on there. At this stage, bit hard to tell what exactly oil wants to do. It's still bullish, But yeah, that could be a max pain that's been caused here. You're looking for that 104 to tell the tale or the story. As we mentioned, Tesla closed down. So it closed down 4.96, but then after hours, it rallied straight back up. What is Tesla doing? It's coiling, guys. Look at this thing. It's stuck in a range. And when Tesla breaks out of a range, it tends to do it in style. That is, it goes for a big move. So hopefully if Tesla buyers keep rallying it, they might even try to squeeze it after. You never know. Retail traders do wild things on Tesla. So if we see a lot of call options starting to get opened, that actually may continue the rally through. Remember, Tesla's well known for going euphoric. And if it does break out of this range, especially to the upside, it could be quite a nice trade. So keep watching that over the next 24 hours. I think it's one to watch in the next open. We'll find out what it does. Obviously, bears, if it breaks below, well, you know the next stop zone is going to be around that 940, 945. Let's move over to Netflix. So anyone that bought the dip here got punished yesterday. Unfortunately, that is the nature of the current market. If you buy it on the open, by the end of the day, you would have been almost ripping your hair out because it went down so much and then rallied a little bit near the close. I did talk in our private live streams about how to take this type of trade if you want to. It's a very, very risky trade. As you know, you're trying to buy the bottom. For an investor, it's different to a trader. If you're trying to just get a dead cat bounce or something, there may be one, but the market started to trap people a lot before bouncing. Think about over here. At the first day, it went down, then up, then it went down again, then it went down again, then it went down again, then it rallied. So you've got to have kind of nerves of steel in these types of trades. Trying to pick the bottom on something that's unhealthy and the market's pushing it through, you're trying to basically buy capitulation, buying the ultimate fear. It's a good trade if you know what you're doing, but you've got to have a very good system that you can replicate through these points. So Netflix, unfortunately, quite low. Let's talk about risk on, risk off sentiment. XLY is one of the ways that we can do that. And this shows us the American consumer to a degree. We've got a left shoulder, we've got a head, we've got a right shoulder. We've currently pulled back down to that level, and we'd expect this to rally in the next session based on, of course, Tesla and other things. So if we break back through, this is really where I guess, we see whether the market's prepared to go risk on again. And if they are, then we move up hopefully to the 190. And if we break through there, then it should be good times for technology along with risk on in general. At this stage, we're right on support. So keep watching that. IWM closed above this level here, the 202. It closed above the 202 just. Didn't hold a green candle, but it certainly bulled up and it definitely broke out of the coil. Could that be an early indicator that we've got movement here in financials, and that also we've got, because remember, financials make a huge part of IWM, and that we've also got a bit of a rally that could come through general risky assets. Obviously not the ones on PS ratios, but yeah, that could be a good first sign here. NASDAQ. Now this is where things get different. We've got a coil. I think everyone knows the resistance. You have a resistance on the real market of around 14,200 and let's call it 65. We've got a support here and we are stuck in the range. Every time it rallies, it gets sold off, and every time it comes down, it gets bought up. In the current market, you would almost think, based on Tesla earnings, if Snap holds up as well, we might be starting to see some rallies coming back through. Netflix didn't do anything to help this, but overall, of course, this is a fight between the bulls and the bears. Current sentiment is down on the NASDAQ. There's no doubt. Every rip rally has been sold. If it breaks through, would that be very strong? I would argue yes. Even some people will probably come up with left shoulder, head, right shoulder on the smaller timeframes here and be looking for that thing to rip back into 14,600. And I think that's probably where it goes. If it breaches through, it's most likely going to that level. So something to be watching. A lot of moving averages here, a lot of resistance. If it breaks through and it comes up again, I would say it's got a good chance of holding through. And a lot of that comes down to these candles. Look at those last couple of hours of trade. Little rejection, sold off. If we rally back through that point there on the day trade, let's have a look at this on a 15-minute chart just to break it down. Here we go. Look at this, little 14,100. If we rally through that point, it's not super strong, but you can look at this and say, well, wait a second, does that push us towards this 14,260? I think it certainly could. And of course, any further sell-off, where do you go? Back down to the lows, putting pressure down this side, and then the bears win. This is a fight between the bulls and the bears in a coiling space. You can tell in the futures, they don't really know what they're doing. Another long leg doji here on the daily futures market. Resistance, support, breach, good news. breach down, bad. And then of course it's sell the rips at that point, guys. And who knows where tech's going next. We'll have to continue to spot that. Let's move over to the S&P. This is where the story gets a little bit